There it is. Excuse me. What's up, everybody? Happy Friday. Thanks for choosing to be here and find some opportunity with me. My goal in my channel and the stream is to help people find opportunity and think differently about trading. And how are we going to do that? We're going to ignore the FUD. We're going to look for opportunity. So what we want to look at today is, of course, what has not been happening, which is the cryptocurrency rally. I know that a lot of people have been jumping into this, and I've been talking about it for several weeks now. Let's do a quick recap. That's what we're going to start off with. And then we'll look at some symbols. If you have any symbols you want to look at, call them out in the chat. Thank you to the TradingView people that are joining us, the YouTube viewers, and on Discord. So let's take a look at the charts. Get the thing sized up. All right. So the big move this week, or the last few weeks for me, has been Solana. Now, I got interested in Solana from a fundamental perspective, based on some friends that are really attracted to Solana for its participation in the NFT space. I know NFTs have been in a bit of a slump. I mean, look, they're fashion. They're going to come in and out of fashion. But the thing that's really attractive about Solana, as far as I know, the smart contracts there have a much lower gas fee. It's easier to make smart contracts. It's easier to make NFTs. And so a lot of people like Solana for that reason. They think it's the replacement for Ethereum. We'll see if that actually pans out or not. But from a technical perspective, let's see if we can bring up the ideas from the last few weeks. And I'm gonna sit down, and I made a video this week talking about where to set your stop loss for cryptocurrency, and I used Solana as a good example. But I'm gonna, now that I have the full form of Livestream, I'm going to basically use this as a teachable moment for why this trade worked out the way it did, both to the upside and to the downside. So let's take a look at the start of this. And this began on, well, like many trends over the last few weeks, it began on the Russian invasion of Ukraine. Yes, when World War III was about to break out, fear was abound. And why does that make cryptocurrency go down? Exactly. It had no other reason than market sentiment. And I say that because I think people need to really think about that going forward. Just put yourself back in the headspace of March and late February, or basically the entire quarter one of 2022. Just try to remember emotionally what was going on in your head, everyone else's head, and the market as a whole. There was tremendous amounts of FUD in everything, all risk assets, all growth, all cryptocurrency, everything. And then suddenly, over these last few weeks, no one cares anymore. Well, that is really just this year's lesson in how market psychology works. And I'm harping on that because you need to take that in mind. Like, I still field a lot of reactions from people asking me, well, what about this yield curve inversion? Is that not going to show that a recession's coming? Okay, what? Look, I've been doing this for 10 years. Every damn day, there's some kind of FUD, some kind of fear that people are talking about in the market, and you really just had to discount it. And you know what? I could run a channel where I post a thumbnail of a scared emoji, like and speak about what everyone's afraid of. Talk about that a crash is coming, trying to warn people, and I could get a lot of views, okay? Because fear really sells. That's the whole business model of CNBC and the financial media, is selling people fear. But it's the exact opposite of what you need to be doing in moments like that. When everyone else is scared, that is when there is opportunity. I mean, people read the Warren Buffett quote about buying when there's blood in the streets. But when there's actual blood in the streets, when there's an actual war going on, everybody's afraid that, I don't know, what are you afraid of? If there is a nuclear war, if there is World War III, then you're not going to need the cash anyway. You might as well buy some assets, buy some stocks, buy some crypto, buy something, because if there isn't a war, there's a good chance that that was going to be the best opportunity of the year. And I hate to say it to people, but that might have actually been it. And now we're going to have to see what happens for the rest of the year. There's a lot of people that are coming back to me and talking about how, well, I'm going to buy, this when it gets down to this price. Well, what if it doesn't get back down there? Like the FUD of the whole market brought it down to that point. What more fear is there going to come the rest of the year? I don't know. Anything can happen. But we'll leave that as my rant of the live stream. Let's talk about Solana, and let's walk through this, why this was an opportunity and how you can find it on the next thing. And look, you got to have your own method for finding things. This is just mine. I share it because I spent a lot of years developing experience on it. And I really just, I like to share. I love doing this. This is my passion. Okay. That's all I want to do. I don't charge for my Discord. I don't, try to sell ads on YouTube. I don't do anything like that. You won't see any shills, that April Fools. Actually, what's funny, my April Fools joke that I did, hold on, let's see. Did they bring it back? April 1st. They actually took down, I got a message from TradingView. They took down my April Fool's joke because they said that you're not allowed to advertise premium services. And I have a pretty good relationship with a lot of the mods at TradingView. They happen to like me, but this one I never talked to before. And he messaged me and I was like, did you read the bottom where I literally said, just refer to today's date. It's a joke. I'm not charging. So, but they obviously they brought it back up because they acknowledged that it was a joke. I don't want to take people's money. If I'm a trader, I should be making it. So, all right. Without further ado, I needed to kind of get my wheels greased. Now we can talk about Solana. And thank you for joining. I see people are streaming in. Yes, we are absolutely going to look at XPX and Bitcoin. In fact, Tommy, yeah, let's just switch gears. I don't come in with a script. Let's do a market recap first, and then we'll talk about education, and then I have a hard cut at 5:00. So we will get you in and out pretty quickly. So again, thanks for joining. All right, let's look at the market as a whole. All right, then Smith got it in first. ICP. Intermediate Capital Group. Is that what you're talking about, or is it ICP the coin? I bet you're talking about the coin. Correct me, Smith. All right, so let's take a look at the broad market. All right, we'll look at cryptocurrency first, then we'll look at the stock market indexes. So Bitcoin. Know what? Just let me know, Smith. I will look at it. Okay. So. Oh, give me a symbol for that, and we'll take a look at that. I just go on technical. Okay, cool. Got you. So everyone has been watching Bitcoin, and over the last few weeks, it has been very interesting in several ways. The first was, of course, what I made an idea about back on March the 15th. This was really, 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 really key. This event right here, where on March the 15th at 10 p.m., every single cryptocurrency had this volatility spike. That really set up the potential breakout of this broad consolidation right here. Let's just clean this up. We don't need to see all my fancy lines and stuff. So this little movement right here that I was watching, it happened, and it's very odd. And so that set up basically a breakout, which Bitcoin was a bit of a lagger about actually going. It actually pulled back from that only to go up. And this got a lot of people interested that maybe this long-term consolidation on Bitcoin was coming to an end. And a lot of people got in last weekend, I got a lot of DMs from people last weekend around here, people saying like, "Oh, okay, I really feel like this is it. I feel like this is going to go back up to retest the high." And I actually thought that if this rally continued, it should come up to 51K. The reason 51K is because that would be a halfway, a 50% retracement of the move down. Well, it has, as of making this, fallen short. But here's the thing. Let's look at Ethereum. Ethereum had the same movement, had the same rally over the last few weeks. It also began on this crazy little event right here, March the 15th, 10 p.m. Eastern. And when it actually triggered the break of that high, it never really looked back. And up and to the right, it went. Ethereum actually drove the price action of this rally. And that I find very interesting. A lot of my Web3 friends really, really like that opinion that Ethereum is actually beginning to move the cryptocurrency market instead of Bitcoin. So I'm going to go on the record and say today, April the 8th, 2022, that Ethereum, despite what the price may be doing, is actually beginning to show signs of dominating the price action of the market. Now, the cryptocurrency market, if you've been following it for a while, it tends to move together. You'll have some outliers out there that will move more than others on any given day, either up or down. But broadly speaking, the cryptocurrency market cap moves the same way. And really, this is nothing new. This was a part of Dow theory, which was applied to the stock market 100 years ago. Uh, I don't know his first name, but Mr. Dow laid out the rules of Dow theory. And one of them is that indexes must confirm each other. In other words, stocks of the same industry would all move in tandem. They would have their alpha, they would have their differences, but they would move all together. And in this recent rally, where it made that spike, just like everything else, and then triggered this rally up, the 50% retracement of the move down the last 6 months was 3,500. Ethereum hit that level, and that is where it stopped. And it actually set up a nice short as well. This is the kind of stuff that I love to look for when price is making a rally and it begins to hesitate. You have a little hit of the 3,500 here. Let's use TradingView here. So let's just go through the Ethereum move. So Ethereum sets up the spike, blows up my alerts because I scan for these types of volatile price movements using TradingView. Hits the alerts and then triggers the breakout. Now, honestly, I went for the Bitcoin breakout. That's one of the reasons I'm harping on this, is because while the Bitcoin breakout worked, excuse me, hold on. Allergies. While the Bitcoin breakout worked, Ethereum was a much smoother ride, and I wish I was in Ethereum instead. But it worked out. The rally continued. It went up, it went up, it went up. Let's draw our resistance level. Okay, I've got it set up here. Cool. Let's go back and let's let it play out. Yeah, 30 minutes, fine. Hold on. No, they're 2 hour. And we're going to watch this until the rally continues up until it gets to our 3,500 level and smack. So you have price respecting it initially and then another time as well. Now, if you're on the 5-minute chart, you could probably look at that as like a double top, but it's a daily level. This is a 6-month level. So if you did that, if you tried to trade on the 1 minute or the 5-minute, as I know a lot of people do, what was that, April 1st on a weekend? Oof. If you're on a 1 minute on the weekend on cryptocurrency, you ain't smart. Look, I've been there. I've been up till 3 a.m. on some 1 minute, 5-minute charts years ago. And you know what I'm talking about if you do it. Don't do it. Just stop. Just take the weekend off. That's why I like the stock market, honestly, because the stock market closes. It gives me a break. But This on the higher time frame, the 2 hour, we have that spike that happened again at that level, and that's my entry signal right there because that is a very, very volatile spike. It has an ATR clearance of 123%. What that means and why I measure that is from this high up to here is 120. Can I draw like that? Not that good. 123% of an average true range, which is significant. In other words, that is more than 23% that it moves on an average bar, a 2 hour bar. And so that's why I use that metric in case you wonder what that ATR clear means. And so that sets up an entry. And yes, it plays around. I'm never going to get it at the perfect price, but with a stop above that high, it was able to capture the retracement from this move. And what's interesting is that Bitcoin stopped. It actually started hesitating a little bit earlier. It started hesitating around March the 28th. Ethereum was still kind of making its way up, but really when Ethereum hit its level, that's when the cryptocurrency market reversed. And you can see this across all currencies. One of my favorites, Monero, it's actually kind of holding its ground. I think you should take note of that. Cardano, again, there's that spike again, all hesitating around the same time that Ethereum was reaching its point. Now, I'm going to add something to my crypto list right here. Again, that my Web 3.0 people are going to really enjoy, and that is the ETH.D, which is the Ethereum market cap dominance. Because the Bitcoin market cap dominance, and we'll look at this on a daily, I've got the line there, but I'll draw it again. It has been declining. In fact, Bitcoin market cap dominance has been below 50% since last year. And that's to be expected. There's a lot of projects out there competing for the capital that's being put into the cryptocurrency marketplace. What this represents is the entire cryptocurrency market cap, like every single coin multiplied by every dollar that it's worth in existence. And then you take Bitcoin and its market cap, its number multiplied by its coin, and this is the percentage. And it is beginning to fall off. And so I made a video a couple of weeks ago because I was getting the question, is altcoin season going to begin? And you can know that by looking at the Bitcoin market cap dominance. And so it's been in decline actually for the last several weeks. It's coming down to about 41%. Ethereum market cap dominance is definitely on the rise. Now, it has some ground to recover to get back up to what it used to be. I think it's, if we go back to the weekly here and we look when in 2017, I believe that's around, that big point in the last big rally, it was up around 30%. I'm going to be interested to see what happens when Ethereum gets to 25% of market cap dominance. That's going to be a very interesting level if it can get there. And so if I was going to trade this, if I was going to look at this from that perspective, which I caution against because I don't believe you can actually trade this symbol, but that's what I'm going to be looking for. And one of the ways that I'm going to be looking to trade that is using the Ethereum Bitcoin pair cross. Now, again, another thing that I posted, another trade that I've been in for like over the last few months is there was a setup right here on February the 4th that I was able to play down to a support, close most of my position. But now Ethereum versus Bitcoin has definitely been on the rise. And from a technical standpoint, I like the little maneuver that it just did. Remember, I found resistance here at 0.074. And notice how you have that spike right there. That's my signal. And was able to take it down to these lows. Well, I would have liked for it to broken the lows, but that's okay. I got stopped out on my remainder. But now I have something telling me it's going the opposite way because this same resistance level, it is pulled back to and held. So this is interesting. I'm definitely going to be watching for Ethereum to actually start to take over. And regardless of what the cryptocurrency market does, up or down, there's going to be movement in the different pairs. In other words, the Ethereum versus Bitcoin, Bitcoin versus Solana, Ethereum versus Cardano. There's all these different pairs. And if you aren't able to trade them, if you can't see them on your exchange, it's time to move your crypto. It's not that hard. You put it into a coin with low fees. I advised someone on this earlier this week. Actually, believe it or not, Bitcoin Cash, one of them, whichever one you choose, has very low fees. It's pretty quick to confirm, and most exchanges take it. And so, if you want to move, like let's just say that you have a Coinbase account. First of all, why are you trading on Coinbase? They have the highest fees in the marketplace. I think they charge 1% commissions. You should pay no more than 0.25%. Find an exchange. The ones that I would recommend, if you can, if you're not an American, or you can log in as not an American, Bitfinex, FTX is another one. And if you have to trade on an American exchange, Kraken, I think would be better. Much better fees and a lot more access to other cryptocurrencies. But anyway, look for these cross pairs on your exchange and find an exchange where you can actually trade these, because these are not only good for trading opportunities, even when the market's going down, these are also great ways to hedge. And that's what I've been telling people for weeks and weeks and weeks. And so be looking for these cross pairs. So, all right, let me take a quick look. Monero is actually, Monero actually, it's been my favorite because it is a privacy focused coin. It has not been performing in the YOLO way I think a lot of people want. Of course, it had a great run in 2021, like everything did, but it's been very stable. Like for, let's just say from this little, the bar it made in May of 2021, we're basically at the stability point, and it's lost, 40% up to 48%. That's basically the same kind of volatility either way. And see, what about Ethereum from that March point? Well, it is up because, like I said, it's having some dumps from May up till here. It's up 50%. So people were still doing pretty well in Ethereum. Bitcoin, on the other hand, let's see, from that May crash point to here, it's up 22%. What else? What about Solana? That was the one I was looking at. May. Oh, that's going to be a big run. Yeah, big run. I mean, think about it in these terms. Okay, over the span of a year, yes, it's done this, but this thing's up 356%. Sometimes it helps to not look at the chart. It helps a little bit too. So, all right, let's look at internet computer, and then we're going to look at the stock market to kind of round things out. So, is this ICP USD? So I believe this is going to be one of those common things that I get asked when people are in a coin and it's doing a chart like this. Again, if you look at the thumbnail for this live stream, it's poke it with a stick. And I don't really know what to tell you in this case. What I would do is I would say you established a low on February 24th, like everything else. You absolutely don't want it to break this low, because then, just like it's been for the last couple, it's going to be in free fall. It's going to continue. It really, really, really needs to hold 19, because now you're going to start getting into the danger zone. And that's just the way I'm going to evaluate everything. Like, I cannot stand a back hold. It just does not fit in my temperament. Because when you are in a position that you don't know when it's going to reverse, you lose all your edge in trading it. You become emotional about it, and you're not going to make a good decision. What's going to happen is you're going to sell it. You're going to get out of it right before it reverses. Happens every time. Or if you hold on to it, it's just going to get worse. So I hate it for folks that are in this position, but sometimes you just got to cut your losses, even if you like the project. So that's my message to people in that. Any other questions you guys got? Let me know. GMT. Is this a stock or a currency? Bass Koenig Financial Advice. Okay. Let's look at the stock market. Let's take a quick recap of that. and I'm going to use the S&P 500 futures for this. And let me clear off my day trading levels from this week. Okay. So you see right here that I've marked off the correction 50%. It's the Steven thing. Okay. I'll look at it here in just a second. I'm going to get to Saul in a minute. Actually, I will. I'm actually going to give a review of the trade, Bahabar. So, all right. So, stock market basically, you had the high January the 4th. You had the low when Russia invaded Ukraine. A lot of people thought the world was going to end. Turns out it didn't. So, you have this rally that surprised a lot of people, but not me, not people on my Discord, because we knew that even though the entry point for this spike was up here around 42.80, even though it played around here, I got a lot of DMs from people. Hey, are you still long? Are you still long? Yes, because that was really the key. If we get down into the 4,000s on the S&P 500, look, I'm going to start getting bearish too. But we didn't. And I don't think we will. And what's happened is, again, just like I was looking at Ethereum from top to bottom, this recent down move, it establishes a 50% retracement at 44.54. And we have come down on Wednesday, Thursday, and Friday this week, ping, ping, and we have held. That's key. You can see here where when price got up to it on March the 18th, it hesitated and it kind of waited around on March the 22nd, popped up, retested it here on March the 23rd, and then launched this last leg of the rally, which a lot of people, I think, started FOMOing into. And now it's pulling back because that's what happens when you FOMO. It pulls back on you. It's holding, and this is key. I'm long. If we start to play around below here, then I'm going to say, look, we're going to get some more volatility. But reading this right now, long. NASDAQ. It had its correction level at 14, let's call it 14,800. It has broken it, but the Nasdaq is a cantankerous little thing too. I believe that it's following the pace of the S&P 500. Again, like Ethereum, it hit its level and everything responded to it. I believe that even the Nasdaq is pumping below. I think a lot of these tech stocks have been getting hit. But I think it's also going to, even though it may play around in here, I think the S&P 500 as a whole, as long as it holds this level, I'm going to be long. So that is that. Let's do a quick recap of things. By the way, I do a weekly video where I look at the levels of everything, and I really do a quick dive. So oil, which I know a lot of people have been looking at, it's been one of the clearest things to watch. In its move up, it got to 100. It spiked out. I thought that was it. I was wrong because I, like everyone else, take profit too early. It went all the way up and then pulled back down to the 50% of this whole move from December up until March. Held there at 96. Then it came up to the 50% of the move down, which was roughly 112. Reverse from there. And now it's back around at support. Honestly, I am really looking in the long term. We're talking like 1 to 2 years out, oil to hang around 100. And so if oil were to rebound next week back up to 112 or start its move there, that would be what I'm looking for on oil, actually. So I use 5 fib channels to form an infinite pentagram. Is that normal? Well, anytime you start talking about infinity and pentagrams, I think you've kind of exited the realm of the normal. I mean, I'm curious though. I like hearing about people's methods. I just keep it with just one fib, and that's the 50%, and that's not even really a fib. I have only so big of a brain, and I like to keep it that way. I like to keep what I talk about and what I look at for trading manageable. So there. All right. Let's do, as promised, the recap of the Solana trade. And Then we're going to wrap things up with maybe some stocks and whatever you guys want to look at. So just let me know. Crypto, Solana, USD. Okay. So again, recap. March the 3rd, I noticed that there was a spike on February the 24th. I'll get to that question in a second. When option, I'll talk about that in just a second. Let me make this segment right here, and then we'll get back to the stocks. This gave me a spike at this key level, just like everything else on February the 24th, the Russian invasion of Ukraine. And so you got to ask yourself, what does Solana have to do with Ukraine? Nothing. So why should it be down? It shouldn't. And that is the signal for opportunity. When, I don't know, there's rain in Africa and the price of oil goes down. These two are not related, but for some reason they're down at the same time. That is a divergence. That's a bad example. Anyway, cryptocurrency should be independent. Look for these kind of divergences or just wait for technical setups. And what basically happened on that day was, if you look at it in isolation, you can see the setup of a double bottom. Very simply, if that's the kind of chart pattern that you want to use. I like to look for the spikes, but also this was happening at the red line right here, which was a past high that it had made back in August on the run up. I mean, you can see it. You can see here back in August where price rose from a low of July up to a high of 81, responded to it, and then broke above it. These are things that I like to look for in the future. And so then when price hesitated at this level, once again, it pinged it in January the 24th, which incidentally was when the stock market and everything else was down, and then pinged it again and made the spike on the February the 24th. That sets up a really good long trade. So where do I set my stops? I give just a little bit of play from the low to there. I call that the buffer. All right. And what I base that on is about 33% of average true range ATR. Why do I choose that? Well, I want it to be small, but I want it to be reasonable. And this helps me code an indicator around that makes it uniform. In other words, that buffer is going to be roughly the same across every pair. And that's where I like to put my stops and why I use that. It's usually, most times, enough, all I need. And we're going to see that play out here in just a second. The target level. Why do I choose the target level? Well, this was from the low of July up to the high, the 50% retracement of that move. Okay. You also have some response to that level to give me confirmation. Now, another potential level would be, of course, the 50% of the whole down move. And so another target would have been 167, and it still could get there. But the closest one was 141, and that allowed me, with a stop of just that much, to get a 4-to-1 reward to risk ratio. That's good. I want 3-to-1, 4-to-1. I'll take it. It's even better. Now, let's see how this played out on the way up. So it triggers the entry on February the 27th, and it actually plays around through March while the stock market and every other risk asset was hanging around, making people worry. For several days, for almost a week, this position was in the red. But remember, all I needed to do was just make sure price stayed above that wick, that spike. Came down even more to retest it. And then finally, it started to show some life. March the 15th was when we got that crazy event of volatility. And I was already in Solano, ready to take it back up to this level. Now, This level right here was one I already had in mind, the 141. And I have a friend of mine, a good friend of mine, that put a sizable amount of money into Solana. And I tried, I don't want to take people's personal responsibility for people's trading, but I try to help people out, especially my friends. And I'm not going to tell you exactly like what to do, but I sent him 2 messages highly suggesting he de-risk. He did not respond to them. They were read unanswered. Well, at the same time, what I didn't tell him, because I didn't want to fully influence him, was that I found a short setup. Again, at that level, price did the spike again. And maybe if you go here on, again, I don't necessarily use these patterns because they're fun, they're artistic, but it made a head and shoulders there. Yeah, isn't that cool? That's some cool art there. But more importantly, it gave me the setup I like to look for with a spike. The main reason is because I know where my risk needs to be. Once it sets up that wick, once it sets up that spike, I know that my stop needs to be up there and I can adjust a risk reward accordingly. So, again, back inside the range right here, stop above here, and then back down to this little swing low right here. That gives me a good 3-to-1. And so that was the trade down to the short side. So both long and short, and just so far missed the 110. Just missed it. Just missed it. Just missed it. I actually closed it out on the way back up right here. Now it's back down. Okay, that's fine. But these two events where price gets to a level, shoots past it, and then gets back inside it, that's what I look for. And you should too. That if you want to, everyone is constantly trying to look for the bottom of something or the top of something. It's because nobody likes to take a loss. Nobody likes to sit there and let a position sit in the red. Come on, I don't like it either. I don't like it any more than anyone else does. But it happens. But sometimes if you can actually try to catch almost the bottom or the top, but you have to be patient. You have to find those levels in the past. You have to wait for them. And it can take weeks, maybe even months for something like this to set up. Let price push past it. Let other people jump into it. And then wait for that confirmation of price coming back with inside that level on a lower time frame. Boom. Wow. That is where you get that low risk entry on that broader, longer term level. It's a thing of beauty when it happens that way. And so that's basically the Solana trade. So, what do I think about Solana in the broad scope of things? Well, really, the trade from down here, from 80, is still in play. And as I told my good friend that really wanted to be in Solana, your stop is 72. Don't ask questions. You do not want it to break this range. Yes, it could come back, but no. No. This consolidation needs to be the bottom, not so that you can retire, not so everyone can achieve their financial dreams. It needs to be the bottom because that would indicate a breaking of this would indicate some really dangerous price action of a crypto bear market. In fact, I honestly think that we are in a crypto bear market. So I very much caution people, especially the people that were trying to FOMO in to Ethereum and Bitcoin last weekend. Resist that fear. Resist that feeling. If you're feeling it, everyone else in the market is feeling it too. And the only way you're going to make money is do things differently. You got to think differently about these things. And that's what I try to impress upon people is to think differently about your trading and investing. Don't be doing what everyone else is doing. So now what I'm looking for in all of these is a 50% pullback of this recent rally. Bitcoin is there. So if people really wanted to participate in this rally, I really hope they didn't jump in here when they felt like it. I know a lot of people did. I hope I'm not talking to people that did, but I know a lot of people DM me they wanted to last weekend. Now would be, I'm not going to be mad at you. Ethereum, though, again, from earlier in the live stream, it could pull back a little more to 3K, 3016. That would be back in here. But I caution because you're still in a messy, messy, messy price action. This is not a bullish trend. This is not a bullish trend. And time is going to tell if this was the beginning of the rally to take us up or if this was just a pullback to the bear trend. So the crypto market is sitting on a precipice. It's not a knife edge, but it's a very dull, wooden sword. But it could fall either way. It could fall either way. All right, so let's look at what you guys want to look at in the chat to end things out. All right, so Polkadot. Let's do a quick analysis of Polkadot. Is it going to be .USD? I'm going to assume it is. All right. Look, everything made those February the 24th dips. Man, what did Polkadot care about Russia invading Ukraine? Looks a lot like everything else. Everything, like I said, Dow theory states that all indexes must confirm each other. And what that means is that assets within a certain sector, asset class, are going to look a lot the same. They're going to move the same. And that's what all crypto is doing. And so basically the level on Polkadot would be 18.99. Let's call it 19. 19 Polkadot, that's the level that it's probably going to get to probably over this weekend, and it needs to hold. If you're going to set up a trade on something like this, unless you get some kind of like a lower time frame setup, remember this is a daily level. So if when price gets to 19, go down to, let's just say, a 30-minute time frame, okay? Look for some sort of hesitation at that level, a break below it, and then get back up into it, and then this is where you want to buy to go back up. That's the general premise for what kind of price action I want to do or use to play a level, a daily level. So 19 on this, that's what I'd be looking for. Come down to there, be patient, have an alert in TradingView or whatever program that you use. Watch it, not too closely. Don't get obsessed with it. Let it get back above that level, and then you might get a little pullback right here. In fact, if you're really impatient, if you're afraid of missing it, and you get back up to here, okay, you can take that if you want to take a breakout. I'm not a breakout trader. I don't like that because if you enter here, your stop needs to be below that low, and so that's a lot of risk. I am rather cheap, and so I'd rather get in here with the stop right here and basically have half the risk on. That's just me. That's what I like to do. All right. Polaris. Is that a coin? Is it like Pol USD? Okay. Let's look at this one. Oof. Okay, that's a 30-minute. Let's look at the daily. It's one of those catching falling knives, man. Oh, proof of liquidity? No, that's not it. Hold on. You got to give me the actual symbol, Money Bull. Sorry. Give me the symbol. All right, let's take a look at stock. Oh, okay. All right. Polaris Media. Is it Pol? The Polaris Inc. PII. Okay. All right. Let's go back and look. We're going to need to look at this on a broad time frame. Okay, so we have our COVID low, which, by the way, is the key for a lot of stocks out there. COVID low to this high. I'm going to look at this at 92.54. That's what I would look at. In fact, you have basically that's where it launched from in the end of 2020. It's coming back to retest that. You do have some inflection. Let's do a horizontal line. I'll teach. There you go. Okay. You do have a good bit of inflection right here at 103. I'm not mad at you if you wanted to take it off of this level, but man, it would be really, really nice if this 50% matched up with that. I would take that with you. I would. That would be a really good setup. Here's what I like to see. Let me just show you the example here. This is Coca-Cola. Coca-Cola, it had a low in December. It came up to a high in March of this year, pulled back on March the 10th to this level, which matched up with some past highs. Oh, that was a beautiful trade. Definitely took this one. And Amer, you still there? Are you in Coca-Cola? I know. I see you listening. Coca-Cola, sugar water, everybody. Who thought? Who would have thought in this world of cryptocurrency that one of the best winners of the last few weeks was Coca-Cola? I really, really encourage everyone to have some boomer stocks. I know that old stocks, old dividend playing stocks are not very exciting. I know that artificial intelligence stocks, I know that media companies, I know these are all very tech companies are very, very exciting, but some boring stuff like ExxonMobil from December, energy companies, ExxonMobil did, does, and will continue to pay a very, very high dividend yield. What is the dividend yield on ExxonMobil? I know a lot of people think the EV is going to make gas obsolete. Not yet. They still have a dividend yield of 4%. You know what else was a really good one? AbbVie, pharmaceutical company that you probably never heard of. I even had on one of these things where I looked at it in 2021, had a 4% dividend yield. Look at this. Look at this shit coin. Look at this. Look at this. And you know what? Even at this price, AbbVie still pays a 3.25% dividend yield. Don't get so focused on these exciting meme tech stocks, okay? We've seen what can happen. There is lots of stuff out there moving in the broader market. Look at some boomer stuff. You will thank yourself 10 years from now when you are a boomer that these are the stocks that you invested in that gave you a dividend reinvestment. I know it isn't as sexy now. You're 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 not going to double your money on Coca-Cola. You actually kind of almost did double your money over a year in AbbVie, as a matter of fact. So, but I realize doubling is not nearly enough for some people. I know that they need 1,000% gains. I get it. I understand. Well, there's a really good chance you're not going to actually get that. But what you can get is outsized returns outside of the normal market appreciation, which is what, like about 7% per year is what people assume. Well, incidentally, that was inflation last year, so you need better. But yeah, look at some other stuff. But let's look at some other things. Newegg. Egg. So yes, the meme stocks, the dead companies like GME and AMC have found some meminess in the last couple of weeks. What are you trying to do? I'm just going to be honest. I'm just going to be frank with you. What are you trying to do here? Like, ask yourself that question. Do you want to own Newegg? Like, do you want to own this company? This company, which, yeah, it could give you a lottery ticket like that. Okay. Okay, good. But that's going to be a one-time thing. Is that all you need to retire on? Is that all you need to solve your financial goals? Do you need like one isolated event to happen in your entire trading career? Is that all you need? Are you willing to put the money into it, the risk into it to make this one-off event worth your time? Really, ask yourself that question. Or Amazon, which is pulling back from its rally to 30.45. Now, I've been talking about this at length because Amazon, again, was one that I am remiss that I missed, because from the COVID low up to the all-time high. It pulled back. It missed it on the 24th of January, but it hit it on March the 8th, and I didn't have an alert there. And then 2 days later, right here on this bar, they announced they're going to do a stock split. I was sad, but I was patient. And again, all this was posted on Discord and TradingView. I waited until I had a 50% retracement of this move and got in on March the 14th. And I've got my position for the potential rally, the split rally, which we saw in Tesla, Apple, and Nvidia over the last 2 years. They all rallied before the split. I've got my entry in Amazon. And Amazon is a company that I don't need to worry about. It's freaking Amazon. Okay? So again, I get it. Newegg is exciting. And thank you for bringing that up. Don't think I'm picking on you too much, but I am. What are you trying to do here? Are you going for a lottery ticket, or are you going for a company that you want to have 10 years from now? Because both are online retailers. Which one would you rather have 10 years from now? Ask yourself that question. Be honest with yourself. Are you having fun? Are you enjoying the stock market game? Okay. I'm playing a different game. I'm playing the long game here. That's just me. So 30-45, it may be your last chance before this split. The Amazon split is, Amazon and Google this year are my highest conviction trades. I don't say that lightly. I don't say high conviction because I'm not going to sit here and like yell and scream, but that's the closest I get to yelling and screaming to people that these two stocks are my choices for 2022. The stock split date of Amazon is going to be on June 6th. So we have 2 months. 2 months. I'm in it. I hope it rallies, and I'm letting you guys know. So that's what's up. Yes, I do have a Discord. Thank you for letting me plug it. It should be in the signature to the live stream below. It is free. I know there's a lot of premium Discords out there. I trade for a living, so I don't need your money. And I just want to have a community of people sharing ideas because, one thing that came up a few weeks ago, Palantir, which I personally don't care that much about, but a lot of people really love Palantir. Palantir was one that I added to my alert system, which is on my Discord. And on March the 14th, right there, on March the 14th, Palantir gave me a signal, and boom, we got into Palantir. I wouldn't have looked at it if it wasn't for members of my community. So I attribute my success in doing the social media, this publishing of content. I'm not trying to be a professional YouTuber. It'd be nice if I got my message out to help people think differently and find opportunity. But part of that is a little selfish that I want to generate opportunity for myself and others, real opportunity instead of chasing the latest meme. So yes, that's a plug. Discord chat should be in the YouTube signature. Also the Trading View. Just come talk and ping me if you don't get the member status from the automated bot. We'll get you set up and you can see everything because as you know, there's a lot of scammers out there. All right, AMD. Good point, Z option. AMD, I am long AMD, and I would very much prefer it to have gone. AMD gave me a setup, which again, did I post it? Yes, I did. AMD was a setup on March the 8th, and it pulled off of that level. I got a little bit off, but not as much profit as I would have liked to. This is gobbledygook. But this spike down on March the 8th, that was a good level. Again, it's at a major level. All right, let me just clean this up. So it is at a major level right now. The same level I basically bought it at, which is about 100, psychological level 100. It needs to hold here. If it really meaningfully breaks below here, I'm going to stop out that position. But I am long AMD right now. I was able to capture a little bit, but not as much as, of course, I would have liked out of this. But yeah, it has retraced now. This is support. This is the last level. It's got to hold here. Yes. So that is what I'm looking at. 100 AMD 100 has to hold, or else I'm over it. I don't like losses. I was having a conversation today with someone about TLT, which I know we talked about last week. We entered TLT, Manaconda and I stopped out this week. I stopped out at about 126.37, and it's kept on going down, and I'm okay. I'm okay with that loss because I don't know where this thing's going to reverse. I don't want to be in a situation where AMD breaks this level and now it's coming down into the 80s, the 70s, and I don't know what to do. So if it doesn't hold this support, on to the next one. It's okay. I don't like losses anymore than anybody else, but I hate bag holding even more. All right. Did we lose chat? Is everything still going? Okay, looks good. All right. Twitter. Okay, so Twitter. Let's talk about Twitter. We got to talk about Twitter this week. And probably if I wanted to really key on the algos to drive more engagement, I would have put Elon's face in a thumbnail, and I would have said, Elon buys Twitter, or my face going, or something like that. I'm watching Twitter. I don't want to watch Twitter. I have a Twitter, but I have like 250 people on there because I just started last year. I don't particularly like Twitter for the same reason that Elon bought it. I don't like the way that they censor people. But now Elon's involved. And, well, everything Elon touches wins. And I cannot ignore that fact. So Twitter has always been in my watch list because it is Twitter for spike alerts. This rally off the bottom from February 24th, again, like I look at everything, 42.87. You know, this is why it's good not to jump in on news like that, because now you're getting a pullback. I am absolutely looking for a pullback to 42.87. At that level, I get really, really, really interested in Twitter. But I'm definitely going to be looking for short-term, let's say 30-minute swing setups to establish a position. I don't have a Twitter position. I mean, I've got ETFs that probably have it, but I don't currently have a Twitter position, but I am looking for one because Elon. And I don't know what he's going to do. But he does really good things, and I think you have to have exposure in that regard because who knows? I mean, it's so funny because he and we're going to make this the last thing we look at here today. He has been he hints at everything that he does. Like he hinted at Bitcoin last year before he had Tesla buy Bitcoin. He has been hinting for weeks and weeks with his tweets about Twitter and their censorship and things he'd like to change. Now, these things aren't obvious, but you know that he was trying to give people some hints to what he was doing with what he was talking about. So the lesson here is when Elon starts talking about a company, and I think everyone's going to pick up on this, that means that his eyes are upon it. So take that in mind. So yes, Twitter, I'm looking at it. I got to get on another call, but I appreciate y'all spending this Friday afternoon with me. I do this every Friday afternoon. I'm going to keep it at 4 o'clock for right now. I hope that I help you guys find some opportunities and think a little bit differently about trading. And I really appreciate y'all. Join me on the Discord. Let's talk. I'm on there every day, trading every day. So hope to see you. You guys have a good weekend.